This is how you build long-term consistent wealth using a small trading account. So what you want to do is you want to pull up a watch list of futures underlyings that have options available to trade on them. And then once you've got your list open, you want to have IVR on your watch list, and you want to order everything from high to low IVR, and you also want your IV, absolute IV, showing as well. And if your broker doesn't display this watch list natively, just copy these ticker symbols and make your own custom watch list. You want to go down and pick something that has an IV rank of at least 30, preferentially over 50, but over 30 is fine. Whatever you pick, you want it to be uh, nice and diverse with respect to what's already in your portfolio. And if you have a smaller account, then you probably want to stick to things like currencies, soybeans, bonds, etc., things like that. If you have a larger account, feel free to trade whatever you like. We're just going to choose live cattle / LE for this example. It has an IV rank of 40.6 and an absolute IV level of 17.6%. So we're going to then pull up a list of expiration dates for the underlying. And you want to pick an expiration date that's between 30 and 60 days out in time. And there's one here, 49 days, May 2nd. So we're going to open that up and we are going to be presented with the options chain. And so now what we want to do is we want to sell some contracts. We're not going to buy contracts. We're not going to be long contracts. We're going to take the other side of the trade and sell them. Now, when you are selling or when you are short a contract, that means that you want price to stay away from your contract. So what we need to do to get a high probability of success is simply sell contracts that land outside of the expected move, and that's going to give us a high probability of success. So if we look in the top right corner, we have our expected move in parentheses, which is plus or minus 8.13, and that's also visually displayed with this vertical orange bar, as you can see here. And so we simply want to sell a call and a put outside of this expected move. The further out you go, the higher your probability of profit will be. However, the lower your return on capital will be, because you will be collecting less premium up front. And so we'll start with the call side, and you want to make sure you have the delta columns on your options chain as well. And I personally like to be between 15 and 20 deltas. So we've got an 18 delta here on the call side at the 209 strike, and we have a 19 delta here on the put side at the 189 strike. And as you can see, what we've done here is create a range for ourselves. So we want price to stay away from our put at 189 and away from our call at 209. So we want price to stay within this range here. And we have a pretty high probability of success because our delta, there's two functions to delta, and one of the functions is it tells you the probability of this contract expiring in the money. Okay, so if you want to know the chance of this contract expiring out of the money, you would just do 1 minus this, basically, or this minus 1, whichever way around it is. But basically this number is gonna be between 0 and 1. So in this instance it's 0.18. So there's so then 18% chance of this contract expiring in the money. So that means there's an 82% chance of this contract not expiring in the money, or basically being out of the money, which is what we want to happen. Okay, but you also have this contract to take into consideration as well. So we would be looking at about a 60 to 70% probability of profit. That's if we hold until expiration. If we want to get out at, say, 50% of max profit, then we're looking at about an 80 to 85% chance of success here on this trade, which is a very high probability of success. And that means that we are going to be able to get out of this trade 8-9 times out of 10 with at least 50% profit on this position, which means that we're going to have very few losers that we need to manage. So how much money can we actually make? Well, if we were to get filled at this mid price here, we would collect $910 up front, and that would get added to our cash balance um, automatically by our broker. So we're going to collect $900 up front, and our broker is going to require just over 1.2k in buying power to open this position. So we are going to collect 900 and we are going to use 1.2k, which gives us a very high return on capital. It's close to a 100% return on capital, and this is in 49 days. This is not in the year, this is in 49 days. This is the power of combining writing options contracts and using futures. Okay, now you do need to keep your buying power requirement in check. You need to make sure that you are carefully allocating your buying power to your positions, and in order to know how much you should be allocating per position, we have created a free position sizing template. The link is in the description. The way it works is you enter in the size of your portfolio. So say if it was $10,000, you enter that, and then below you can enter in whatever the current VIX level is. So say if it was 32.8, and then as you can see, everything is automatically calculated for you. All you need to do is just use this information to form the backbone of your portfolio, and you will be absolutely fine. There are other futures underlyings that you can trade that have even lower buying power requirements. You can move your strikes to lower deltas, and that will reduce your buying power requirement as well. So futures is very flexible and it's perfect for smaller accounts. If you do want to learn in more detail about what we do and how we do it, again, the link will be in the description. This time click on EDS Premium and get yourself signed up. Once you are inside, you will have access to our portfolio, or one of our portfolios, and that's going to allow you to see all of the positions that we place, how we manage risk, how we make adjustments. Everything is shown in real time, so you can study and reverse engineer the trades or simply copy us. It's completely up to you. And there is also a full course, so no prior knowledge is required. We will teach you everything that you need to know from start to finish. And if you get stuck, it's a private community, so you can speak directly with myself or with other like-minded individuals. And there's also a 100% money back guarantee. So once you have been through the full course, followed some of our trades, if after 6 months you are not profitable, then we will work with you for free until you are, or you can simply request a full refund. So it's risk-free for you. Right now it's $9.99 a month to join. The price will be increasing. Once you're in, the price is locked in for you forever, so you are rewarded for getting in early. The aim of EDS Premium is we want to teach you the skill. We do not want to keep you dependent on us. Once you have learned it, no one can take it from you. And we aim to get you to that point of where you are self-sufficient within 6 to 12 months. So with that being said, I will see you guys on the inside.